And we're live. Welcome back to the Better Than Bitcoin podcast, where I talk about the future of money. I'm your host, Jamie Dabauskas. I hope everyone had a great Thanksgiving break. And before I get into some Bitcoin news, I want to talk about the status of this podcast over the winter break. So I'll be bringing my podcast microphone back home to Florida. So just this thing right here, not the actual arm stuff. I can't bring it on the plane. It's too big. So the regular upload schedule of making a podcast every Sunday will stay intact. I like this upload schedule and I'll stick to it until further notice. I also plan on getting a better camera for Christmas, so this webcam on my laptop will get better than this. I also plan on getting a DJI Mavic Mini, the little camera drone, to make some cool YouTube videos on my main channel. So I'll link that in the description below. I only have one video up about buying Bitcoin, but I'll throw it up in the screen or description below, something like that. And so my main channel, these two things will increase the quality of my podcast and my YouTube videos dramatically. So you'll see that increase over winter break. Anyways, let's get into Bitcoin news. In terms of where the price might go, as of recording this on the daily chart of Bitcoin, I see two possibilities. I'll show you here. Okay. So since Bitcoin punctured the 61.8 retracement of this big move right here, from the $3,000 low to the round up 14K high, it punctured it right there. And if this is a big wave one and a wave two, we usually look for this box right here from this 0.786 to 0.618. So technically it went in that box. So there is a chance that just, like I said in the previous episode, go into the top of the box and just skyrocket from here. But yeah, but there are also, I see, as I'm going to tell you, there are, so right now I'm going to talk about the bullish stuff, and then I'll switch over to a bearish side and talk about both possibilities. So I do see some bullish divergences from that low to this low. So you see basically, for those of you who don't know, a bullish divergence is when the price is seen to be making new lows from this low to this low, while the lows in the MACD are seen to get higher lows. So I'll draw a line for you so you can see it. See a little uptrend in the lows for the MACD, but yet there's a downtrend in terms of price. So that's a little divergence, what's called a bullish divergence. And the opposite of this is called a bearish divergence. I'll show you an example of that now. It's not on the daily chart. It's on the 30-minute chart that I saw. Oh, it's a little small. Oh, excuse me. Oh, it's a little small, but you see as Bitcoin was making new highs right here in this little tiny uptrend, the MACD technically made a new high right here. And then when it made a new high from here to here, from 7,500 to 7,800, you see the MACD didn't make new highs. So that's the opposite. It's called a bearish divergence, as you see right there. See, as it's widening out versus going in, and the bearish, or in bullish is going in, bearish is widening out. Just explaining a few things before I just start spewing out stuff so everyone knows them. So everyone's on the same page. Anyways, there also seems to be a bullish MACD cross on the daily chart right here. Almost. Not quite. Right here, you zoom in all the way. See, it's close to crossing. Whenever the blue is on top of the orange, that's always a good sign. That's always very bullish. And the orange on top of the blue line means it's a downtrend or very bearish. You see this little downtrend. I had the orange on top of the blue. But it's about to cross right here. Maybe I just might touch it and go further down. There's that possibility. But as you zoom in on this little chart, I just like to do 2 hours. This little uptrend from a potential bottom at 6,500. This isn't confirmed 5 waves up right here. This seems like a 1 2 1 2, and it's not complete, and it's failing out of that 1 2 1 2. So this could be 1 2 1 2. Could be a bigger 1 2 1 2. But I don't see that likely. Since there's no confirmed 5 waves off the low, that was put in last week at 6,500 right here, as I just said. Yeah, we could probably see new lows further than 6,500. I don't know an exact target, but I would look out. I wouldn't be surprised if it went lower. So a summary of all what I just said in the past, like, I don't know, 5 minutes, is that in the short term, Bitcoin has a higher chance, in my eyes, to see new lows than it does to have start a new uptrend. In the longer term, I am super bullish, mainly because the halving of Bitcoin, the Bitcoin mining reward, is coming in 5 months in March 18th, 20th, I think, around that. Which means there have been price history before and after halvings. There have been dramatic price increases. So I'm not too worried long term. But technically, if you do get in technically now, which is me, you're basically like a early adopter. You're in a little early, which isn't too bad, but you might sit through all this. So that's not really fun, but overall, not that bad. So some recent news I want to talk about is Cointelegraph made an article and pointing out a possible Santa Claus rally. What I mean by this, or what the article means by this, is they pointed out in the past 4 years, Bitcoin has trended to move 30%, like on average. It's moved more or less. To move 30% during the month of December. So I'll actually show you. Not too bad to show. Daily chart and zoom out. So this is the month of December from here to here. So from, let's say, 9,800 to like the close on December 31st at 13,880. So I would calculate it, but that's probably around 30%. I'm pretty sure. Yeah, so they pointed out that Bitcoin is trying to move 30% in either direction. This implies that volatility that will be increased for the start of this month, because it just started today, December 1st. Woohoo! It's officially Christmas time. So people should be careful not to get their faces ripped off with this increased volatility of the next month. And yeah, just be careful overall. I'll link that article in the YouTube description below. So if you're listening on Spotify or something like that, just come to the YouTube link of this podcast. Subscribe, like, stuff like that, blah, blah, blah. Oh, another cool headline I wanted to talk about is that Coinbase filed for a patent for an automated, like, know your customer enforcement tool. So a lot of exchanges, crypto exchanges, not just Bitcoin and crypto, but banks in general have this policy called know your customer. So like they have to do like background checks to make sure you're not like laundering money through their services. Coinbase has a big, you have to like give them a picture of your ID, stuff like that. So basically Coinbase is now automating all of this so they can flag potential criminals automatically. This means they can automatically flag accounts for illegal activities like money laundering based on like a number of factors, including like account age, transaction volume, transaction sizes, etc., all that stuff. So according to CoinDesk, which is where the article is at, accounts can be flagged and shut down using this tech. But if the transactions are more than $2,000, then they can also hand you over to the authorities and you can get in big trouble. But this sounds like a cool tool for Coinbase to scare away all the real criminals. But the first thing that popped in my head when I read this article is that if it doesn't work the way it's supposed to, then it could potentially flag down legit customers and suck in innocent people into a whole mess of legal troubles and stuff like that, even if they're doing nothing wrong. Like maybe they're just, I don't know. But I know like Robinhood has a automated system that flags down people for day traders, and obviously if they're day trading on Robinhood, you have to go by a certain different rules than the people who just invest and hold. But I know Robinhood, if you day trade on it, they have to do different things. So I have an automatic bot that does that. And I know some people online on Reddit specifically that have like had problems like that. Oh, I just traded twice just because I wanted to, and I got flagged for day trading, even though they're probably swing traders or something like that by nature. So that's a scenario where probably might not happen, or that's a scenario where, excuse me, might not be good for like a legit customer. But I overall I think I would assume if Coinbase rolls out this new tech, then they'll do some testing beforehand so it doesn't false flag people to get, I don't know, raided by FBI. But we'll just wait and see. That's all we have to do. I'll link the full CoinDesk article in the YouTube description below if you want to read the rest of the article. But it's a good read. Oh, okay. Moving on to one of the biggest things I have to talk about today on this podcast is one of the biggest pieces of news in the finance world just happened last Monday. So like a day after I ended the recording for my previous podcast. That's why it didn't make its way into that episode. But I guess I'll talk about it now. Basically, Charles Schwab, the big bank broker, stockbroker, IDG, they announced that they'll be buying TD Ameritrade for $26 billion in stock. The two companies will merge and now oversee over $5 trillion in client assets. This essentially is basically just two big banks merging together to make one mega bank. The deal was made possible when Schwab made their brokerage commission free, forcing all the other banks like TD Ameritrade, E-Trade, all those other brokerages to follow along and make their trades commission free. And obviously, if they're making it commission free, they're not going to miss. They're going to miss out on profits. So obviously, stock prices of all these companies just tanked. And when Charles Schwab had all the other ones tank, I guess they found the opportunity to buy out TD Ameritrade. It's kind of clever. But when it comes to banks making trading commission free and stuff like that, I'm all for it because it removes an additional barrier for the average person to get into investing, which I think is key to building wealth. But when it comes to the banks merging, I'm not so sure about this. I'm really against this because it's basically two banks to get combining to get bigger, and there's almost like a monopoly scenario. Like I don't want everyone's money to be held by one big institution. It just gives that institution more power since it holds everyone's money. That's like, I guess, the path that will go if all the banks end up buying each other out. I know there's certain regulations on monopolies and stuff like that that the U.S. has, but still, it's like makes me uneasy. I mean, in terms of Bitcoin's all about holding and being charged your own funds. So I see this Schwab and TD Ameritrade merge as a big, big, big signal to buy Bitcoin because you should be in control of everything you have, ideally. So yeah, that's all I have to all the articles and all the things I want to talk about today on this episode 6 of Better Than Bitcoin podcast. I'll see you guys later. Peace.